What does it mean, a high yield savings account, for people who don't know? You see, when you have your own credit card and you pay interest on your credit card bills, and there's a percentage on that, you pay interest. It's the same thing with when you have a high yield savings account. It's like the bank pays you interest for the amount of money that you have on the account. For example, if you use just a regular bank, I'm not going to put names, but you guys already know which are the big banks. If those are the banks that you use and you open a savings account on those banks, you most likely not going to earn any interest on those accounts. Your typical bank account, the yield might be 0.01, which means if you put $10,000 on your savings account, you're only going to earn $1 on that account every year. Okay, so the money is definitely losing value. Whereas there are actually other savings account, or what we call high yield savings account out there, where if you put that $10,000, it's going to earn $450 on interest. So you simply put $10,000 there, and after a year, when you go back, you have 10,450. That just to only give you the example. And you might be asking yourself, what are those banks? Why I have never heard. Exactly, it rewards you for your saving. And you might be asking yourself, why did I never hear about those banks? We have couple there, right there, that right after this call, you can go ahead and verify those. We have Goldman Sachs, right? The APY is about 4.5%. We have Ali Bank. We have SoFi Bank. We have Capital One 360, depending on one of them, 4.3 on the high yield savings account, which means if you open a savings account with them, and whatever the amount of money that you put there, and you check what is the high yield, what is the APY, most likely you're going to earn 4.5 to 4.3, and in some cases even 4.6. So your money is actually making more money without making any effort. Basically, that's what we're telling you, and that's why you should, instead of having a savings on you with your regular bank, to have a savings with those accounts, because those are uh there to be savings. Your typical bank is more to be a credit, to be a debit, to do transaction, but those accounts are there for savings, and that's why they pay you when you put your money there. And there will also be regulations. With your typical bank, when you put your money, you can take it tomorrow. You have in that savings account, you take the money tomorrow. You can take as much as you want from that same savings. So is it really savings if you can put it today and take it out tomorrow? That's not how you should be saving.
For example, when you talk about saving, there's one saving options. It's called certificate of deposit, and it's possible sometimes to have it liquid. So one of the things about liquid, let's say that it's usually at a lower rate, so it won't be like at a 4.5, and the 4.5 is when the economy is doing really well, by the way, and the Fed doesn't drop rates. I don't think it's at 4 point right now. I think it's more around the 3 points,
Yeah, that's why
but
the
for the
data is
purpose,
saying
yeah,
it's
for the
2024.
yeah, for the purpose of more conversation, we wanted to show these. But the CD, the liquid CD, let's say that you put 50,000 at 4%, it earns that 4%. But with the liquid CD, you can withdraw every 7 days you can withdraw. So let's say like today, or Wednesday, you withdraw 5,000 from the CD, right? You still earn money on the 45 that remains, and you can only retake money from that account like 7 days afterwards, so next Wednesday. So it's one of those things when we were talking about Susu and Sol, and I was like, okay, there's that saving accounts that exists, but most people don't know that, so they don't want to touch it unless there's a big emergency, but it's still earning money to some extent. So it's even more drastic than a saving. It's like think about it as the saving account plus.
So the other part is to explain to people how they should actually save. So you cannot just be putting money away for no reason. If you're saving, you must have a purpose, and we can give you multiple purpose. One of them is, the first goal should be to at least have the bare minimum, 1 month of monthly expenses. So for the one who said they spend about 1,600 in both rent and utilities, your savings account should be bare minimum. That's the least, at least 1 month of your expenses. Which means if things were to go south, you at least have a savings account where you can at least sustain your expenses for a month. Now you can also push it to 3 months, which will be 7,500. And it's hard to get there, but some people do get there. So if you're able to have some you're not living paycheck to paycheck, you're able to have some spare change. That's what you do. You throw them into what we call the high yield savings account, where that money alone is going to grow, but also you keeping that savings for your, you building an emergency fund. And if you can push it even further, the best one to do, that's why it's green, is to have 6 months of your living expenses. So the ideal target is you should have at least 15,000 in your savings, and that's okay. That's not having too much. If you be able to get that amount of money in your savings, you're not going to make reckless decisions, because at least you know you have a place to get some money if things were to go south. Those are why you should save and how you should save. Now, it takes a while to get there. That's why some people start with, we have $700 a month for a year. After a year, you at least get 8,400 in your savings, and that still puts you in that exactly middle bracket where you at least have money for your expenses, for your cost of living for at least 3 months. And if you can start right now, if you don't have a saving yet, if you can find a way to save at least $700 a month in one of those savings account, then you will be able to, in a space of 1 year, to accumulate about $8,400 in savings for your living expenses. And if you can grow it, that's even better. But to do that, as Fabrice said, the first step is always try to pay yourself first. Send the money to your savings before you pay your bills. Now, to do that, you need to know how much your bills are. And to be able to do that, your bills need to be less than your income. So there are a lot of things that you need to do to make sure that you are respecting all those steps to be able to get there. And
I have a
if
question.
before we, and if that sounds very difficult for you, one thing that we want to say is those are exactly why economy exists. We do assist our community in financial coaching and do financial budgeting, because sometimes it is difficult to be able to do that on your own. To, the numbers might be a lot for you sometimes, and we do offer those services as financial coaches, where we provide that service. We do explain to you how you can actually do those budget, how you can actually better your financial life. Not only we do it through the podcast, we offer the service one-on-one to do it to the financial coaching. And we also have
Basically,
one of our event coming up, which will be a financial workshop, where you can come in person, meet us, ask those questions, and we also will be able to assist you to making those steps for free, basically.
boom, boom, boom.